So again, welcome back. We are going to be doing chapter 10, which is payroll setup. So as we looked before, so it's very similar to actually setting up the company, right? We have an interview process that you go through and you answer a bunch of questions and it fills the information for you. But for this case scenario only, when you do your payroll setup, you are mandatory to go through the interview. So there's no way around it. So as we learned in chapter 12, there's two ways that we can set up our company, right? We have the express start, or we actually have to go through the easy step interview. In this case, no, you cannot manually set up your payroll system. You actually have to set it through the interview, okay? So, but don't worry about that though, because again, if you do make any changes or anything that you do need to encounter, such as making more payroll items, all you're doing really is just you're adding it, but you have to actually manually update whoever's account or your employee's account in order to accept those kind of things. But as far as this, we're only looking at the setup process for the actual payroll in QuickBooks itself. So we'll actually talk about the payroll services in chapter 11, which is again, no class on Friday, so it's going to be on Monday. We're going to take a look at looking at a sample file on how to set up your payroll services. However, I do want to go over quickly just a little glance on what those payroll services really are. So if you click here where it says turn on payroll, right? Here are the services that are available. We're just going to briefly just take a look at it. So it gives you about a couple options. Now, this is if you want to have the calculations completely done for you automatically, okay? Okay, so you pay a certain service, and usually for smaller companies, you want to go for the lowest one, which is going to be the basics. But if you are going to actually be working for a major corporation, right? They have corporate taxes. They have all these XYZ taxes that they have to encounter. Then that's going to be something that you want to invest a little more money into. Now, of course, you can also outsource your payroll, right? Instead of using QuickBooks' services or Intuit services, you can actually order a separate payroll services that you maybe have at a different local bank. The only thing that you had to do is just submit timesheets to them, and they do everything for you. Okay, so basically those are the ways that you can do it as well. But for now, we learned how to do manual payroll, and that's exactly what we're setting up. As far as for this exact thing is, we're going to be setting up for manual payroll itself. Okay, now in order to do that, as you can see, we do have a little section right here because we did say that we do have employees. And with that being said, therefore, if you have employees, then therefore you have the payroll setup, or you have the payroll section. Okay. Now, of course, as we go down into the book itself on page, let me see, what is this? Page 292. Here are the 10 steps to doing the payroll checklist. Okay, so of course, it's by first things first is getting collecting all your employees' information and so on and so forth. Now, this checklist is a pretty good checklist, but what they failed to do is, even before you even do this payroll setup checklist, first off, let's determine, are you guys going to even have employees, okay? Because that's very important too, is are you willing to pay for having employees? That's also number one, okay? You need to come up with a list of who your employees are. Are they salary based? Are they wage based, right? And how are you going to pay for the benefits? Or do you even offer any benefits? Do you offer separate Medicare? Do you offer a 401k plan? And if you do, then this checklist will become a lot more easier to use, because as we move on to step number 1, if you start collecting all of your employees' information and you don't have a clue what kind of employee they are, well, then you're going to be struggling for every single step of the way of this process. So again, the next step is setting up your compensation. How are you going to compensate them? Then the next one's setting up your benefits, and then so on and so forth. So if you have to stop at each little checklist point here to actually have to create it, and that's this checklist is what we're going to be doing throughout setting up our payroll process. If you don't have any of these items readily available, you're going to be on that payroll setup interview forever. Okay. If you have an idea and you know exactly what you want, and you know you did your research, you went to the local agencies, you got their, you confirmed their location, or you set up electronic funds transfer account, so then you do automatic payments over, digitally, then yes, then you are pretty much set to go to use QuickBooks. Okay. So if you do have employees, or if you even think about even having a 1099 contractor, which isn't an employee, if you have somebody that is working for you, you need to have some kind of methodology to kind of understand where they're being categorized, as well as how are you going to pay for them, okay? So usually that's actually rule of thumb first. That should be step number 0, is if you are going to plan to have employees, what items are you going to set up? How are you going to pay them? And et cetera, et cetera. Have you have all your accounts set up, okay? So, but for this example in this class, they pretty much set up a majority of this stuff already for you. So all this stuff here is just pretty much, we're just going to walk through the 10 steps of the payroll setup and enter in as we go exactly what it says here in the book. So first things first is we got to go ahead and turn on, or first create our payroll accounts. So as you can see here, if we go to our chart of accounts, there you go. First thing that we're going to be looking at is if we go down to our expenses, usually they should be revolved with either like payroll expenses, and under that there's gross wages, then you have the payroll tax expense, then you have the employees' benefits, etc., etc. So they've already created it for you. So when you do set up your company and you do plan to have these things, make sure you set up the accounts first. That's what it says as under number 2, is to set up those accounts. So if you want to do a generic basic one, salaries and wages expense is always number 1. Okay. And etc., etc. Okay, so in this case, we have gross wages and we have the taxes here. So when we're dealing with payroll expenses or anything like that, we need to consider that we have company payroll tax expenses, and then we have actually employee expenses. So one side is going to be dealing with paying the employee or having the employee, so making sure that we cover their expenses, and then we have to calculate our separate expenses that we are owing to the government, okay, for our state and federal taxes, okay. So make sure that you have all those things set up. So as you can see right here down below, we have everything that we need so far, because it already this scenario has already been done for us, okay. So we're just double confirming that we have those existing accounts. So here is what I was talking about. The next part is actually having your expenses be linked to actual payroll items. Okay, so payroll items. So we talked about this. A payroll item, right, is going to be a separate list of items itself, all right? So if I go up to the list on the menu bar, okay, if I go to list on the menu bar and I go ahead and tap on payroll items list, right? Here, as we can see, it's just they have a few ones that are already available here, but of course, especially when you do have your when you set up payroll, the automatic assumption is that you have to have items such as counting for federal unemployment, state unemployment, okay, what else? Medicare, Social Security. You're gonna have all of those requirements. Those are the bare minimum of requirements that you are obligated to have to pay for having employees. Everything other than that, such as benefits or deductions, are going to be extra things that you tack on to an employee. And plus your actual items of saying, like, how are you going to compensate them? So we're gonna take a look and we're gonna see that this whole list right here will grow. But for now, this one, they set it up automatically for us by placing the most common ones that are necessary in order to proceed with payroll, okay? And each item, of course, if you actually double tap on, for example, federal unemployment, usually, again, it's we'll set them up as well on exactly what the details are to these. But one thing I forgot to mention is if you're in your chart of accounts, you are actually every time you set up an account, you're also setting up how which agencies or which vendors they belong to. Okay, but that's what we're doing the payroll setup for, is to make sure that we link these things, we say how often we're going to pay our liabilities, etc., etc., etc. Okay, so again, those payroll items are pretty much a list of everything that you can add on or tack on to an employee. Okay. So with that being said, now let's observe our little employee section right here. Because we do not have the actual payroll service on, if you don't have it on, this is what you're generally going to see. You're going to see your enter time, your pay employees window, and your pay liabilities. Okay, so again, this is for setting up manual setting up manual payroll. Now, if you do tap on it, it's going to automatically say, hey, you can't use this section because you don't have a setup. You didn't set up a payroll service. Okay. So what's going to happen here is it's going to ask you to proceed and purchase a service. Okay. So if you are planning to have employees and you are doing manual, you're just going to pretty much have to just calculate it manually and just cut them a check. That's how you do manual payroll, okay? But in this case, if I go into my employee center, again, since I haven't set up anything at all, my employee center is empty. It looks similar to your customer center and your vendor center, right? You still got the list of your employees here. You still got the basic backgrounds and what paychecks you owe them for. So again, if you are using manual, this is going to be your place to do your payroll. Now, of course, we're gonna go ahead and start off our payroll setup so we can go ahead and get that going. So in order to go through the setup, you actually are going to go to your employees menu bar and you're going to go all the way down and then you're going to go to payroll setup. Okay, so there's only one way to set up the payroll, and that is through the payroll setup on your menu bar. Okay. And again, you have to go through this in order to properly have your payroll going. Okay. So once I've done that, as you saw that little green bar, it's pulling up the interview, and this is the interview, and this is where this one's gonna take the most work on. Okay. So again, when we're looking at this, there are 4 categories that we're going to be looking at. We're going to be looking at company setup. Okay, and this isn't company setup per se, but this company setup is basically what are the compensations, what are the benefits, what are the deductions, and what are the additional, additional things that an employee can earn. Okay. Then the next section is going to be setting up your actual employees, right? Now, here we're going to look at one example, but you do not need to do all, okay? You can only imagine how long you'll be on this window for if you have to set up as many employees as you need to have. Okay, so we're only going to be looking at setting up one. Then the next thing we're going to do is we're going to be looking at taxes. So again, looking at all taxes that are involved with payroll. So dealing with federal, dealing with state, dealing with any other things such as Medicare, right? Well, that's actually federal. Federal. That's dealing with federal, which is including Social Security and Medicare. Okay, we're going to be dealing with setting up all of those taxes. And then lastly, the last thing that you got to do is if you are using QuickBooks and if your company has been going on for a while and you finally decided to use the payroll services in QuickBooks in the middle of the year, this is where you're going to have to set up your year-to-date information. So if an employee has been working for you for since whenever, you're going to have to enter in all their year-to-date information. Okay, and that dates back all the way since they started working in the company. Okay, so you can only imagine how long that's going to take when you have to figure out all that information. Okay, and then that's when the whole entire setup is going to be completed there. Okay, so let's go ahead and get started. Let's get started with our company setup. So as we go ahead and say here, okay, now it says here we're going to be setting up the compensations. Okay, so we're going to click continue. Okay, there you go. Now, there you go. So first thing it's going to say is how do you pay your employees? Okay, so a few things that you can see here is, do you have salary-based people? Yes, you do. Okay, we're going to take a look at that. Katie is salary while Mike is actually an hourly. So again, here we have hourly wages. And then, do you offer bonuses? And if you do, then select this. Do you offer awards or any other type of compensation, or even something maybe even for, a good job rewards? Or do you is that something that's going to be in addition to an employee's earnable income? Okay. And if it is, then go ahead and select that. Do you have commissions? So, for example, we have Mike Mazowski, right? He could be considered someone that gets commissions, right? Tips are also going to be, do you want to count them as part of your income? In this case, I'm going to keep that as no. Now, if you are familiar with how Nevada workers are, if they are working at a casino, tips is actually a part of their income. It depends on what company that they work for as well. I know that I believe companies such as like Jerry's, like a local company, they actually do count as tips as part of their actual income. Whereas I think MGM, I think a portion of it is actually counted. Not all of it is counted. So you can select if tips is going to be considered part of their amount of income that they can earn. All right. Other than that, you also have other things such as Okay, I have piecework. Um, then if you don't have any, if you don't know what that is, you can go ahead and click the explain button. So in this case, I don't use piecework. So I'm going to go ahead and say these are good enough. I have commissions. I have all of these. Okay, I'm good to go. So once I go ahead and click next, what's going to happen is now it's going to actually start creating them as payroll items. Now the next question here is, how should commissions be calculated? So because I selected what do you call it, that I do offer commissions, you can either have it as a percentage of sales, or you can actually have it as a capped dollar amount. Let's say every commission that you get $100, or I'm going to give you 10% of every sale that you make. So you could choose and determine, but you can only have one. You can't just be, you can't give one employee $100 for every commission that they get versus someone who only gets 10%. That's technically not fair. So in this case, I'm gonna go ahead and just define it as a percentage. Okay, percentage of sales. Okay, and I'm gonna go ahead and click next or finish. Okay, so now it's created my payroll items here, and this is where I can choose to either edit the titles of it, or maybe there's something else I would like to put on it, maybe change the description. So here, as you can see, the list entails that there's double time, there's hourly, there's overtime, there's salary, bonus, and commissions. Now, of course, in your book, it actually tells you which items you're actually going to be keeping and which items you're going to actually be deleting. So let's go ahead and find that table on the bottom of page 295, and tell me which items are we going to keep and which items we are actually going to delete. Okay. So in this case, we're going to start from the very top. So do we need double time? I believe yes. No. We do?
No. No.
Oh, no.
No.
Oh, I'm looking over here. Never mind. Sorry.
Okay. So it says right here that it wants you to delete. Delete this item. Okay, so we don't offer double time. Sorry. And then it's going to ask you, you're going to delete this payroll item. Are you sure? Yes. Okay. Next one is hourly. We're going to actually edit this. We're going to edit. Okay. And how we're going to edit is we're going to edit the title of it. We don't want it to reflect as just hourly. We rather have it titled something else. So we're going to do hourly regular. Okay? Because we have regular employees, and then we can also have special employees, right? So it's a regular employee, which is, again, usually 9 to 5 is a regular employee. Okay? Or someone who just comes in and does their regular 8 hours a day. Okay? Active is very important because, yes, we are currently going to be using the hourly payroll item. Okay? Other than that, what account type is this? It's definitely going to be an expense. And what kind of expense is it? It is going to be definitely a payroll expense. Okay? So I'm going to go ahead and click.
In the book, it says gross wages.
Oh, I actually have to do gross wages. Gross wages. Gross wages. Okay, you know what? I'm just going to type it in. Oh, okay, I guess I can't type it in.
Like 3 or 4 up.
3 or 4 up.
Oh, no.
There you, wait, nope. Okay, D, E, F, G, R, F, I. Payroll expenses. Okay, payroll, gross wages. There we go. Gross wages. Okay, good. All right, and then it is an expense, and now this is good. Okay, so now I'm going to go ahead and click finish. So now that we have our hourly regular, okay, overtime, unfortunately, I believe we delete this. So we don't offer overtime. And if you do, that's where you can determine how much percentage or how much is overtime paid in. And that's where you can either do double time or you could do it as 1.5. Okay? Usually overtime is between 1.5 and two times pay. Okay. Then we have salary. We gotta go. We have to edit this as well. We're gonna edit the same way as well, except this is going to be, and it says here, salary, we're gonna write regular. Okay, again, it is active. It is definitely an expense item. And then let's see.
Same payroll.
Same thing, payroll gross. Gross wages. Okay. All right. And we can go ahead and click finish. All right. Bonuses. Do we have bonuses?
Yes.
Yes, we do. Okay. Do we need to make any changes to bonuses?
Yeah.
Okay. So what do we need to make a change for?
Payroll expense gross wages.
Okay. So we're just changing. We don't change the title. We're just changing the account that it belongs to. There you go. Okay. And I'm going to click next. Finish. Okay. And then, of course, commissions is based on whatever you do have, or if you don't have it, that's fine. I'm going to go ahead and get rid of it because the book doesn't say that you have it. But if you do it, right? Like I said, when we set it up, right? If we can edit it right now, it's going to ask you the same questions as before, except this time my commissions is going to be considered a gross wage. And yes. And if you go next, what percentage are you going to allow it to be? And in this case, specify the default. So default rate or percentage. So because I said it was a percentage, I'm going to say it's going to be 10% of my sales, or 10%. There you go, 10%. Okay. And I'm going to go ahead and click finish. So here I'm going to add this in there because I say, you know what, my employees, if they do a job, I'm going to have them do 10% off commission. Okay. And then I can go ahead and I have to pull this up and click next or click continue. Okay. So now it gives you a little description that the next thing that we're setting up is going to be our benefits. So first benefits that we can usually see are, are you going to be offering anything in addition to having like other benefits such as Medicare, right? Do you offer health insurance? Okay, and if you do, what kind of health insurance? You can even select my company does not even offer anything. If that's the case, then boom, we could just move on to the next part. But in this case, the book does say that you do offer health care. What kind of health care do you do? Do you do dental care? Do you do vision care? In this case, my company is an incorporated, so I'm going to say no, I don't do vision or health, or dental. Okay, yeah, you guys have to pay for that on your own. And then other things that can happen too is, do you guys offer any special things, such as do you offer any insurance, any Medicare, or any dependent care? So do you offer to extend your health care to your children, to your spouse? And if you do, then that's where you select this area right here. Okay, so do you do a group one? Do you do life insurance, and et cetera, et cetera? Pretty much all that. In this case, I'm not going to have any of them just because I only want to be able to protect my one employee and my one employee only. So I only offer healthcare. And then I'm going to go ahead and click next. So here it asks you, right? Okay, how is health insurance going to be paid? So this is important because, again, most times when you are looking into providing health care, oftentimes you have the scenario where the company can provide it for you, but if you want it, then you have to pay for the whole thing yourself. Or if the company's nice enough, they can pay for half of it and you pay for the other half as a deductible. Or the last option is they pay for it for you 100%. So all you have to do is just work for the company and they pay everything for you. Most cases, it's usually like they pay majority of it and you pay a small percentage of it. That's usually what happens. That's what I've seen most companies offer when they do offer additional health care, is that they do cover majority of the costs and you just pay a small portion of it. So that's what this is asking. Is it saying that the company is going to pay for all of it, or is the company going to pay a portion of it and you pay the other half, or are you going to be obligated to pay for all of it? And in, like I said, most cases, it's always usually going to be both parties are going to pay for it. And then now it's going to say, well, since you tap that middle one, another question popped up. It asks you, is the employee portion deducted before or after taxes? So when we talked about this, right? Basically, this is asking you, are you going to take the money out from their paycheck before it gets taxed, or are you going to do it after it gets taxed? Most cases, it's always before. Okay, it's never usually after. It's always before. Okay, and then I'm gonna go ahead and click next. So here it's gonna ask me to set up the payroll schedule for this. Okay, so how often am I going to pay the health insurance? And in this case, what's the health insurance that I'm paying this to?
Wait, what?
That
It's,
it should tell.
we're,
It,
we're marking, I don't need a regular payment schedule for this item.
oh, okay. I see. Okay. I don't need to. Okay. Perfect. Got it. All right. Then I'm going to go ahead and click finish. Okay. So now I have my insurance right there available, and then I have my health insurance available. So one portion is so there's two of them, right? One is for the company that pays for it, and the other one is for the employee to pay for it. I can't remember if you have to delete one of them. I think you have to delete one of them. Okay, so one is for the one is for the company and one is for the employee. So let's go ahead and take a look in our book because I believe you do have to delete one of them.
Health
Yeah.
insurance company paid
Paid.
item, then click delete.
So which one?
The
Health
company
insurance company paid one.
Okay, and we're gonna delete that one. Yes, yes. Okay, so we only have this one, the pre-taxed one. So that's the item. Do we need to change the name of it? I think we do.
edit, yes, medical
Medical
insurance.
insurance.
Okay, there we go. So now I'm going to go ahead and fix this. Instead of having all that information, I'm just going to say medical insurance. Okay. And then I'm going to go ahead and click next because we already set it up. Okay, same thing here. We're not going to schedule anything. Okay, so there we are. Now we're here. And what account am I going to link this to? Because it is a liability. Or is it a liability? It should be an expense.
Expense.
Yeah.
Expense, yeah.
Okay. And what account is it going to be? It should be under
Insurance expense.
insurance expense. Insurance expense. Insurance expense. Health insurance. Perfect. Got it. Good. And then we're going to go ahead and press next. And then now we're here. Use standard tax settings. Yeah, that should be fine. Okay. Next. Finish. Okay. So here we have to answer this right here. Choose a method to calculate the annual, what does that say? Then specify the default. Okay, so we're going to be looking at the defaults here. Do not calculate, enter in the amount. Okay, so here the default rate or amount. How much is the employee expected to pay? I believe they have to pay $100 or something like that.
Yep.
Yeah.
There you go. And then is there a limit on how much you can do? No, usually no. There's
It's
for
monthly limit, it says, and then restart each month.
oh okay. So restart
Monthly limit.
monthly limit.
There you
Okay.
go.
So there you go. All right. So then we can go ahead and click finish. So now we have our health insurance item set up. And there you go. Okay. So first thing that we're going to deal with is what benefits are we going to be providing. Okay. All right. So that's just dealing with healthcare. Now, if we could click continue, now it's going to be additional benefits such as retirement plans, okay? So as you can see here, we have a list of retirement plans that we can offer our employees because we are incorporated, right? Usually corporations, they have more money. They benefit or they provide lots of benefits and even possibly a 401k plan is usually the more common one that you see amongst employee benefits. Because I've never heard of a 457b plan. I've never heard of a 408k plan. So for any reasons you want to look into it, go ahead and go to irs.gov and go ahead and search it up so you can have a better understanding of what these are. Now, from my understanding, IRAs are going to be something that you personally do and not a company never provides an IRA. So usually companies only provide at most 401k plans. They don't do anything other than that because if you are doing through an employer, they cannot provide a 401k and an IRA. It's either or. But you as a person, right, as an individual, can have both a 401k and an IRA. Okay, so make sure you understand that. A company cannot provide both for you. They can only provide one or the other. But most commonly, they don't provide IRAs. Okay, they only provide 401k. All right, so with that being said, I'm going to say I do have a 401k plan. Yes, I do. Okay. And again, for all the other ones, I don't know what they are, so I'm going to go ahead and click next. So now I'm going to actually set up my 401k plan. Well, actually, not really. I'm going to look at setting up the payroll account for the 401k plan. So, for example, who am I paying for the 401k plan? I don't think I have one yet or an account number. So you have to set this up for the employee when you have it. And then the next question asks you, what is the payment frequency? So how often am I going to pay for my 401k plan?
I think we just.
I don't do a regular.
I don't think we do this part.
Okay.
Book.
It's in the book, yeah.
It's
Okay.
in the book, but we have the vendors, Merrill Lynch, and they have an account number, and they have a Monday, and all that stuff there, and I don't need a regular payment schedule for this item.
So they do have the company.
It says Merrill Lynch, yes.
Okay, so the Merrill Lynch Company. Okay. Merrill Lynch Company. What's the account number?
is 99-12345678.
Perfect. Okay, so what this Merrill Lynch is basically, this is the company that we're actually going to make a payment to in order that we're providing this 401k plan. So there are a bunch of companies that do have these kind of securities, right? So Merrill Lynch is going to be one of them. Never heard of them, but that's good. That's good. All right, and they're gonna. You said pay every Monday.
Huh? Yeah.
Pay every Monday.
Yeah. Everything
Perfect.
there is right except where, yeah, the check mark B. I don't need a regular payment schedule for this item.
Okay. So next, so here you go. I have my 401k plan. So I have one for matching and one for the employee. Okay, so that is true. You need to be able to have two of them because we on our end must match a 401k plan. And usually the percentage for a 401k plan is anywhere from 4 to 6% of a paycheck. So it's not that much. Okay, now I set up my 401k plan, so I can go ahead and click continue. So now here is the next one, and now it's going to ask you what kinds of paid time off do you offer? So again, this is where PTO comes into play. Do you even offer PTO? Do you offer sick pay, sick pay time off, or do you offer vacation pay? Now, as luxurious as many corporations, companies can be, they have the luxury and they have the money to be able to pay for the employees to take a vacation. Okay. But for smaller companies, you might not be able to afford that because you kind of need the labor. So in this case, it just depends on what kind of company you are and do you offer this in the first place. So here it asks you what are some examples that you could possibly have as far as having paid. You can either do paid sick time off, so pay them when they're sick, and you can also offer vacation time. Now, this isn't limited to just only these two, right? These are just common payroll items that you normally would see for that kind of reason. You can have you can have You can have holiday pay off, right? Pay them so they take the holidays off, or you can even have them have personal time off instead of paying them when they're sick. You can actually dedicate certain days or like a certain number of days that they can take for their own personal day off, right? Maybe they need a schedule to go to a doctor, right? That's going to be considered paid time off. Okay? So other than that, it gives us hourly sick and hourly vacation. Then we have salary sick and salary vacation. So all of those look pretty good. All right. Do we need to set them up? No. Okay. So I can go ahead and click continue. Okay. Now, the next section that we're going to do is any last minute deductions that are going to be considered a part that's going to be taken away from their paycheck or something that they pay for things that they can have, right? So we have cash advantage, right? These are just examples. Cash advantage. Do you allow your employees to have a cash advance?
No.
No. Okay, no. Other things would be like taxable freight. No. Oh, sorry. Taxable fringe benefits. So we talked about fringe benefits, right? If I can say, I can get you into the Met Gala, so I can get you free tickets. That's considered a fringe benefit. And how it's taxable to you or to the employee is that I can give them a discounted price or I can offer them the free service, but they have to do something in return. Okay, so that's a fringe benefit. They can't just go to the Met Gala just to go to the Met Gala. They have to work. Okay? Other things that could be technically a deduction or anything is anything that's like a meal, like if you have paid meals, like you have a cafeteria and you give them credit, right? What actually is really happening is that the employees are actually getting reimbursed for that. They're not actually, they're not actually getting free tickets or anything like that. It's considered a fringe benefit. Other things too that you can do is if you have union fees. Union fees are definitely going to be something that you're going to have to take out of your paycheck to protect the rights of your of the employees itself. So union fees can be considered one of those. Okay. So other than that, I believe I don't have any of these deductions. Okay. So if I don't have any of these deductions, then I can go ahead and just click finish, and I have nothing there. Oh, I think I selected one of them. I selected that I have miscellaneous items. Oh, actually, no. Right. No, never mind. Okay. So now I'm going to go ahead and click finish. Okay. Now we finally completed the very, very first section, which is dealing with all the compensations, dealing with all the benefits, all the deductions, and taking care of whether we provide things or not. Okay. And we also looked at, do we offer other benefits? Okay. So that part usually takes forever just because you have to really truly decide. Are you going to offer it and are you not going to offer it? And if you do offer it, how much are you going to offer it? So there's a lot of details into providing benefits or even even thinking about compensating your worker. If you say they can earn double time, well, you gotta draw that line of how many hours they can go overtime. Okay. So now that we completed that section right there, the next section is to now finally do part number 2, which is going to be dealing with employees. So setting up our employees. So we're going to go ahead and click continue. So the first thing is here for our list of employees. We don't have any right now. So now we're going to finally enter in all the information that it is necessary to have for one person. Now, in order to set this up and set this up correctly, you're going to need to have the employee's full name and everything. You need to get their W-4 form because that's going to tell you everything about how they want to get paid. Plus, it has their social security number on there and any information such as their address and things like that. You need to collect as much information about your employee as possible, especially their social security. If they don't have a social security number and they are illegal in the U.S. or they have a temporary green card or a temporary work visa, then you're going to have to use that number instead of their actual social security number. So then they can, when you file for their taxes and whatnot, it will go to the correct account or to the correct account. So that's the most important thing is that if you're having a worker, you need to have some kind of legal paper documentation, proof that they are able to work. So that means proof of age. They need to be 18 years and older. Or I think is it still 18 or is it now 16? I think it's 16 now. Yeah. So they have to provide you their birth date. Okay. So all of these things are going to be necessary. So let's go ahead and type in our first employee. We have Miss Katie Reynolds. Okay, REYNOLDS Reynolds. No middle name? Okay, good. So the first thing we have here is this is Katie Reynolds. Is this the name that's going to be used on the actual paycheck? So for example, right, my name, I go by Lynn, but on my paper, I have to go by my legal name, which is Lynn. Okay, so in this case, you can do that if you have a If Katie is just her nickname, you might have to write it's Catherine Reynolds, whatever it is. Okay. It has to match, because if you this to the bank and it doesn't recognize that it's Katie, then you're gonna have a whole issue on submitting in your actual paycheck. Okay. So you want to make sure that the name matches the name that's going to be used for their bill. Of course, this person is active. Of course, that's why you're creating a profile for them. You would technically not create a profile for someone who's inactive unless you're doing it for auditing purposes. So maybe you had an employee that temporarily worked for you for 3 months and then they quit, and you're trying to do an audit trail, or you're trying to summarize up your taxes and prepare them for the government when you file your taxes, then yes, then you would be able to do that. But in this case, every time you do an employee, they should be active. Okay. Other things that we have here is going to be a home address. Where does she live?
422
Enos.
Enos. Yeah, I couldn't read that either. Enos Lane. And she lives in Danville, California. So Dan. I am having typing issues today. Danville, and it's going to be the state of California. Now, every time you type this information in, what QuickBooks actually does is it actually pulls up the information based on your location. So if you're going to apply for let's say it's an out-of-state job, what's going to happen is that QuickBooks is going to know that you're doing a job out of the state, because it's going to take this information, it's going to take your address, and it's going to take that you currently reside in California. So they're going to look up all the taxes that are involved in California. So for example, right? For example, the company here is in Nevada, right? PETA. PETA is located in Nevada. But if I came in as a worker and I'm from California, I have to pay California tax, not Nevada tax, because I am a resident in California. I just choose to take the option where I am working out of state, which you can do. There's rules and stuff and guidelines on that. So that's why irs.gov is a very powerful website. You can learn all about what happens when you have out-of-state workers. So that means you're going to be pulling in different taxes, because they're not going to be taxed at the same rate as you are if they are a Nevada citizen. Okay? You're going to have to tax them based on the location or the residency that they belong into. So if they belong to California, they're subject to California tax. If they belong to Georgia, they have to be taxed at the Georgia tax. Okay? Just a little FYI there. Okay? So now that we have the state of California zip code,
What is it? 94501.
94501, and now we can go ahead and click next. Oh, nothing else. Yeah, nothing else. Okay, next. So here's the next section where it talks about what kind of employee are they. They are definitely a regular employee, right? They're not an officer, they're not a statutory, and they're not the owner. They are a regular employee. Okay, so make sure you understand the difference between the employees, right? There's a total of, I think there's, if you go to irs.gov, there's about 8 different types of employees, but in this class we learn 6 that are more prevalent. But yes, okay. And then next question here is other.
It's Social Security.
Okay, Social Security. Oh, sorry. Okay, so Social Security. What's her Social Security number?
333-22-4321.
Oh, 4321. All right. And then, of course, now that we have a legitimate, well, in this case, legitimate identification number, okay, or social security number. So now the next question is, when did we actually hire her? Okay, in this case, it doesn't have to be super specific, but it's good records that you keep track of when you hired your employees. So in this case, I'm going to go ahead and make up a random date. I'm going to say January.
It has
Um,
a date,
oh, does it? What is it? January?
April
No,
1st
April.
of
April
2008.
Fool's of 2008.
Right?
April
So
Fool's Day.
Wow. Okay, cool. All right. And then of this, again, this is pertinent information. So then you can kind of know the status of them, because a lot of what often happens is, or oftentimes what happens is that the longer the status of an employee, the more benefits that they can gain. Like, for example, you started out them because they're just a brand new employee. You start them off by saying, okay, you can only have 5 sick days off. Okay, as you get there and they see that you've been there every single day, then every year that you go, they'll be like, okay, now you're now considered senior status. We'll let you have 15 days off. You know, you get more benefits as you go through and become an employee long term. Okay, so that's why that's always going to be important to have that. Release date. She's still working for us, so there is no technically release date. Okay, and if there was, then you're gonna have to also write a description there too. What is her birthday?
January
January.
31st, 72. 131.72.
Oh, 131. Okay, I heard 1-1. So her birthday's coming up soon. All right, and then gender. Now, for QuickBooks, you do have the only choice is a female or male. Now, if it's going to be, since we're living now in the 21st century, gender isn't important, but it may be pertinent, especially when you are submitting this information to the government. Again, especially for Nevada, right? Our department is the DEETR, the Department of Employment, Training, and Resources. You want to make sure that you report that you have X amount of employees, because they usually do this for employee turnover rates and for research for what is the what is the gender rate in hiring. So for example, if for IT, for example, right? If you work for an IT company, right, the gender rate is going to be probably about 80% is male, and then the 20% are female. So something like that. It's just for statistics. It's not something that it's truly like pertinent as far as this. And if your employee wants you to not disclose the information, then you have to be legally binding and not disclose it. But in this case, it's fine. She's not going to say anything about it, so we say she's female. Okay. Next. Okay. Now, the next thing that we're going to be looking at is going to be, how are you planning to pay Katie Reynolds? So this is where we can tack on anything that we need to for her. We're setting up how she's going to get paid. So in this case, we're going to try to pay her every other week, so bi-weekly, or we can do it every semi monthly, meaning only 2 paychecks. So you're being paid on the 15th and the 30th. For her, because she is technically salary based, it will be it'll be on every 15th and every 30th of the month. Okay, so it's going to be salary, right? And then other things that we want to see here is going to be for the salary amount. How much is she gonna make? I believe she makes $60,000, which is pretty good. Pretty good for working at a photography place. And it's going to be per year because again, she's salary, but if it's a wage, if it's hourly, then you could put like whatever amount that it is. Okay, so she's salary, so it's $60,000 per year. Usually, salary is based off of an annual percentage, and then here is going to be the detailed amount percentage of commissions. Does she get commissions? Yes, I say okay. Okay, well, you say no, I say okay, because you have the option. Does she get commissions? If she does, then you select this. Okay. So remember, I added that. So I'm gonna say Mike Mazowski has the commissions, not Katie. Katie's just an admin. Okay. So I'm gonna go ahead and click next. All right. So the next one is going to be tell us about any additional items for Katie. All right. So what can we offer her? We obviously are going to offer her 401k plan. We're obviously going to allow her to have medical insurance. And yes. Okay. No, wait. We're not going to offer her the matching one, but we're going to offer her the employee one. All right, and then here, so that means she has any amount subject to how much she wants to put in her 401k. You can talk to her about this if she has a set number. Again, it has to be at least anywhere from 4 to 6%. Is there a number for her for this one?
None on the book.
None. Okay, but the $100 medical fee is there already.
But there's a limit.
Yeah, there's a limit.
$16,500 limit.
For the medical?
Yeah, the first one.
401
Deduction.
deduction.
The
Okay.
401k deduction.
401k deduction is 16,500.
1,500.
Okay, 16,500. And then for Medicare or medical health,
0.
okay, good. That's what I figured. Medical, there's
Well,
no.
the limit on the match 401k is 5,500.
But you did not put the match 401 on the when you were setting it up.
Okay, there you go. There you go. Okay. Okay, and then it was 5,500. Okay. There you go. Oh, it won't. Okay. Okay, there you go. So we're going to go ahead and click next. All right, almost done with Katie here. So now the next portion is how is sick time is calculated for Katie. Sick time. Let me see. So the first one is Katie Reynolds earns. How much does she earn for every day that she's sick?
Oh, I went right to vacation time. You're on.
Oh, how many out? I'm sorry. This is for how many?
Oh,
Yeah, but what I'm saying is I went right to vacation. You're on sick.
I'm on sick. Yeah. So it's
Yeah,
80.
mine went to vacation too, so I
Yeah,
wonder
we
if
went
they go in
to-
different orders.
Well,
Oh,
you have a
okay.
previous one there, so do you go back? Did you skip one? It's in the book as well. We start with vacation, not sick.
we didn't offer a sick time, only a vacation.
Is that why?
Mm-hmm.
Yeah. Right, okay.
Let me see. Did we offer? I thought we did offer vacation. We didn't even set that up yet.
You did vacation, but not sick time.
Let me see. I have regular. Here next, I have salary. Salary. I have my salary here, and then I have 401k, 401k, blah blah blah. And then the first thing I see here is the calculations for sick. So I have sick time off in mine. So, what does the book say?
Right below that in the book.
It's none. It's none on
It's
the
not.
book. I
Yeah.
think when you were setting up the very first one before inputting the employee information, You did not put the sick time, only vacation that you offered when you were setting up.
Are you talking about me? Because I obviously have the sick time. Because
Right,
I'm
all the
calculating my
vacation
sick
is
time.
vacation, isn't it? That's the,
Okay.
Yes, I know you only put vacation, no sick time.
Okay, so I'm just gonna go ahead and just say, let me see how many sick time can she go ahead and have per paycheck. I believe she has. I'm gonna make it up. I'm gonna put 60
yeah,
hours.
you're gonna have to look it up because we can't tell you anything because we don't see it.
Okay, that's fine. And what happens when unused sick time hours happen? Does it go over to the next one? Do you have in an account an actual limit on how much you can have, or it must be used, or they lose it? I'm gonna say if they don't use it, they'll lose it. So when does it start? January. Okay, on day 1. Okay, and then when the next question is Katie Reynolds earns time off currently. Okay. Okay, so I'm gonna say yes. She can current. She's able to receive it at any given time. Okay, and then I go again down here says that how many hours available as of January. She has 60. I'm gonna say, okay, and then how many hours used as of this? She used 0 so far. Okay, so next. So okay, now here's where we have the same common one. Here is going to be the vacation time. Okay, so Katie Reynolds, how many hours does she have of vacation time?
80.
80. Okay, and then next question is going to ask you how many unused vacation hours. Okay, what do you do with that? Do you want to, um, okay, and then what is that maximum hours?
200.
200.
All right, and then, okay, Katie Reynolds earns. Does she earns it now? Time off now or no time?
Off current.
Okay, and then how many hours has she accumulated so far?
We don't see that part.
I'm going to say because we're setting her up for the first time, she has a full 80 hours and she hasn't used any.
Yeah, I got you.
Okay. So I'm going to go ahead and click next. So it's exactly 2:42. So Michelle, go ahead and go and then come back and finish this up. Okay. I'm going to stop at employees though. Okay. All right. So now we're setting up Katie Reynolds direct deposit. Now here's the option where you can have them. Yes, you can either have them direct deposit. If not, then you don't need the bank information. So most oftentimes is if you do have a direct deposit, you actually have to pay a certain fee for the bank to be able to process this for you. So yes, little did you know, you do have to pay for everything that you do. So in this case, so if you do have direct deposit, it is something that you have to pay for. But that's why they usually say that if you have a payroll service itself, they're already calculating for you. They're already going to provide the check for you. So by tacking on that one last thing saying, hey, I want my employees to be able to get direct deposit, that's another additional fee. But in this case, I don't have Katie's bank information, so I'm going to go ahead and make sure that I skip this section because if I don't pay Katie through direct deposit, then that's okay. Then I'm just going to pay her by a regular standard check. There's nothing else to that. All right. And then now it says, tell us when Katie Reynolds is subject to taxes. Okay. So actually, I'm going to stop here real quick. So then when Michelle does come back, she can go ahead and finish the rest of the stuff. Okay. So let's take a break. Right now it is 2:45. Or I'm going to round to 2:45. So please be back no later than 3 o'clock. Okay. I mean, yes.
3 o'clock.
We'll do 3 o'clock or 3:05. Let's do 20 minutes.
Okay.
Okay?
305?
Right? 3:05.
Okay.
Okay.
See you then.
See you then.